The development of the capital market has been identified as one of the key levers that could accelerate economic growth by giving the Rwandan public and the private sector access to long-term capital. On this particular episode of Doing Business in Rwanda, we take a look at the efforts put in place to increase listing on the Rwanda Stock Exchange, as well as the privatization efforts. You will be with me, Tessie Cavan. Since its inception in Rwanda, the capital market has mobilized a total of close to $1 billion over the last decade. The current total market capitalization stands at $4.3 billion, which represents 43% of the GDP. 10 big corporate companies are currently listed on the Rwanda Stock Exchange, including Rwanda's leading cement manufacturer Cimerwa and the cross-listed South African healthcare investment company RH Bofelo Limited, both of which came on board this year. Conspicuously missing on the country's bowls, however, are the small and medium enterprises, which, according to statistics, form 90% of the private sector. Gilbert Nkurunziza owns a shoe factory, and he has been in operations for slightly more than a year. Now, as an SME, access to funding is one of the challenges he's facing. What is his view of the capital markets, and does he think that SMEs have a place there? Let's find out.
I don't know much about it because there's not enough information out there about it, but I know it does exist. But I've always thought it was for big companies like the breweries and companies we've known for so long.
Asked whether he would consider the capital market as an alternative source of funding for his business, this is what Nkurunziza had to say.
Yeah, I think we'll be interested, not right now, but eventually we'll be highly interested because it's a great opportunity for a company to grow, but also get access to funds.
Acting Executive Director of the Capital Markets Authority in Rwanda, Eric Bundugu, gives a number of reasons why SMEs are seemingly shying away from the stock market.
I think the challenges that SMEs are having on not being able to raise capital on the stock market, most of them I would say are inherent challenges that include disclosure requirement, corporate governance, lack of awareness about the importance and benefits of raising long-term capital through the stock market. And it's also include the costs of transaction, because the transaction to come to the market involves some costs on doing due diligence on the legal side, financial side, because when you hire transaction advisors that do due diligence on the financial aspect, technical aspect, and other aspect on the transaction, it involves cost. So some of these challenges that we see, and the nature of these challenges actually is linked to the nature of the businesses, of the small and medium enterprises. And we all know most of our small and medium enterprises are family-based owned business. And that means that has a meaning on how they are run. And there is a reason which we understand. However, there is also hope or possibility to advise better these SMEs to be able to graduate from where they are to where they need to be to benefit from long-term funding through the stock market.
The capital market model has focused mostly on the formal businesses and big corporates, leaving out small and medium enterprises for a number of reasons, including lack of proper disclosure and governance. Now, in order to attract the SMEs to the capital markets, an investment clinic has been launched with the aim of helping SMEs to be investor ready and also help them raise capital through the capital markets. According to the CEO of the Rwanda Stock Exchange, Celestin Robukumba, the investment clinic is an initiative that will elucidate the capital market in Rwanda.
So at this stage of development of our market, we have been dubbed to be elite-oriented. You know, for big companies, and investors are all big people. But guess what? We want to demystify the notion of capital markets in Rwanda, and to make the capital market work for the general public and more companies, small and medium enterprises. They make up at least 90% of the workforce of companies actually in Rwanda, on the economy in general. So if you have 90% constituents you are not addressing, then something must be wrong. So we want to make this accessible to as many companies as possible in the small and medium enterprises, and we are addressing a gap we know they have. So basically, that's the reason, because the main market segment has had companies. We have now 10 companies listed in our market, but we want to also to extend this to small and medium enterprises.
Poor corporate governance lowers the overall value of a company and wards off would-be investors. The investment clinic hopes to address this challenge among SMEs.
So Rwanda is known for good corporate governance, but mainly it's in the government institutions, not necessarily in the private sector. So we want to help and support these small and medium enterprises and others to make sure that they become good corporate good corporate citizens, and they are investor ready. That's the key message. So we want to make them investor ready, and could be a debt, could be equity. From a bank, from any angel investor, a PE company, a venture capitalist, anybody who may want to look at a company, if they know they have passed through a program like this, I think it would make a big difference for them, because the due diligence we do, the ecosystem we use of the larger capital market industry, and other professionals who will be holding their hands for a period and going through the program we have designed for them, I think it will make a big difference for anybody.
With many SMEs perceiving the stock market as a place for the big dogs, what is the Capital Market Authority's strategy to attract them to the stock market and help them access the numerous funding opportunities therein? Acting Executive Director of the Capital Markets Authority tells us more.
First and foremost, what we've been doing is to put up a conducive legal and regulatory framework. Means our laws and regulations that we use to actually provide guidance or assess applications for products to the stock market, to make sure that they are, I would say, user-friendly to these applicants. So far, what we've done is to cater for this SME segment of private sector business in Rwanda. We usually have requirement that any applicant needs to meet to be able to give an approval to come to the stock market. So we've seen the nature and the dynamics that are in the SMEs. So we had to lower requirement to cater for SMEs. So we have what we call disclosure guidelines for small and medium enterprises, meaning to guide them on what they need to disclose as an SME. And part of the requirement that we had to slash for SMEs include, for example, usually you need to have a track record. That's a typical example I'm taking, for at least 3 years, showing, financial records. But for SMEs, we wanted to give them chance that if your business case makes sense, your asset is really, good, your projections are good, due diligence has been done on the legal, financial aspect, why not? So we had to slash that requirement for SMEs and another couple of requirements.
In the 2019 World Bank Ease of Doing Business report, Rwanda slid 9 places back to position 38 globally as a result of not meeting the international standards of having an active stock exchange with at least 10 private companies listed and trading equities. As the country aims to smoothen the privatization process, the cabinet recently approved a new privatization policy and strategy to address the challenges observed and gaps present.
Well, I think, privatization is not something new in Rwanda, because if we go back in the most recent past, actually it's been more than 20 years now, privatization has been in place. Recently, actually, I think Cabinet has passed a policy promoted by RDB and the ministries in charge to look at the gaps and to even create more avenue for future privatizations in the country. So I think the shift has come as just a normal course of doing business in government, where you are trying to address a few gaps that have been noticed before and improving the processes. Because
Yes.
now before, when the privatization was being launched before, in 96, during what we call ajustement structurel, was, the capital markets, for example, were not in place. There was no PPP framework in place. All those things now have been put in perspective, and they are part of this new policy of how people or how government is going to be privatizing going forward. Well, actually, I think, by privatizing, you are definitely reducing, not necessarily entirely eliminating inefficiencies in some instances, like we have seen previously in some public assets managed by government, but you are also, removing some aspects of comparative advantage of having government on board in a company. So then you leave it completely to the private sector and other investors to now focus on the business side without having to compete with government in those businesses like that. So sometimes people see it that way. It increases some of that. But now, if a company is in private hands, it has a different way of looking at things. So it's purely business. It's not. It cannot be social. Definitely, it has to be purely business actually. So that means you are increasing the efficiency and profitability in most of the cases, if you manage it, of course, prudently. And the employment also increases, I think, taxation and so on. So the moment you become more efficient, you become more profitable in principle. So I think that is added. So now by including also the general public, it adds some value.
That's a wrap on today's episode of Doing Business in Rwanda. You are with me, Tessie Cavan. Keep it CNBC Africa.